Okay, so we'll now move on to the next chapter, which is budgetary control. So this would be the last chapter for the old syllabus students. Okay, so now what is budgetary control all about? Now in budgetary control, you will be expected to do the following things. Okay, first one is to prepare flexible budgets or to prepare functional budgets. Now, what do you mean by flexible budgets? What do you mean by functional budgets? When it comes to flexible budgets, okay, using the properties of variable cost, fixed cost, okay, we will be preparing flexible budgets. So in flexible budgets, they give you raw data for say any given level of activity. So let's say the given level of activity is 10,000 units. So when 10,000 units are being produced, they give you all the costs associated with those 10,000 units. And then they say if the organization wants to manufacture 15,000 units or say 20,000 units, then in that case, what would the costs be? So here we will be using the principles of variable cost and fixed cost in order to prepare budgets for these two levels. Okay, so budget is nothing but a financial statement or a quantitative statement. Okay, financial statement or a quantitative statement aiming at achieving some purpose. Okay, the purpose could be anything. It could be cost control, that I want my costs to be this much only for this period. Or it could be that, no, I want to earn this much profit for this period. Okay, so when we're talking about flexible budgets, we use the principles of fixed cost and variable cost. Now, what are these principles? Again, I am reiterating. We've already studied these principles in the previous chapter. We've studied these principles when we did the first chapter. Okay, but I'll still give it to you in writing. Okay, what are these principles? So write down variable cost. First one, variable cost remains the same per unit. Variable cost remains the same per unit. Variable cost changes in total. Variable cost remains the same per unit. Variable cost changes in total. Guys, correct? No? So suppose I'm manufacturing, so let's put units here. Let's put variable cost per unit. Let's put total variable cost. Okay, so let's say I'm manufacturing 0 units. Let's say my variable cost was rupees 2. So total will be 0. Total will be 0. If I'm manufacturing 10 units, variable cost per unit is 2 rupees. How much will the total be? 20. If I'm manufacturing 100 units, variable cost is 2 rupees. What will my total be? 200. Correct? So what do you see here? Whatever I just told. Variable cost per unit remains the same. Variable cost in total changes. Okay. Next. Fixed cost. Fixed cost. Fixed cost remains the same in total. Fixed cost changes per unit. This we saw even in the previous chapter. Correct? So units let's put fixed cost per unit, total fixed cost. So let's say that the total fixed costs were, say, 1000. Total fixed costs were 1000 and I am manufacturing 0 units. So at 0 units also I will incur total fixed cost? Yes. Whether you are producing or not, fixed costs have nothing to do with it. Fixed cost has nothing to do with units. So even at 0 I will be incurring fixed costs, but at 0 I will not be incurring variable costs. So fixed cost per unit will be infinity. How? 1000 divided by 0. Anything divided by 0 is infinity. Which means non-determinable. Cannot be determined. That's what infinity means. So leave it. Next, let's say I'm manufacturing 10 units. My total fixed cost will be 1000. Remains same. Per unit, 100. Correct? Similarly, let's say I'm manufacturing 100 units. My total fixed cost will be 1000. Remains same. Per unit, 10. So see this? What did I say? Fixed cost remains the same in total, but fixed cost changes per unit. So by using these properties, you will be preparing flexible budgets. Like the name suggests, flexible. From one given level of activity, you can figure out what the cost would be for another given level of activity. Okay, so that is the first kind of problem that you will be solving. Okay, now the second kind of problem that you will be solving, that is preparation of functional budgets. Guys, so the various functions in an organization like purchase, sales, labor, all of those things, you may be asked to prepare a budget for the respective function. So usually the functional budgets that you will be asked to prepare include purchase budget, sales budget, production budget. This could be in quantity and value. This could be in all in quantity and in value. Okay. Next, raw material consumption budget, labor budget, labor utilization budget, any other expense budget, cash budget, and so on. So you can be asked to prepare all these budgets as part of functional budgets. So now preparing these budgets is very simple. Your concepts need to be clear. So if you remember in chapter 1 and chapter 2, that is your cost sheet and material chapter, we had seen what the difference was between production and consumption. So if you remember, I had given you an example. Say 1 tomato juice requires 2 tomatoes. Correct? So here, what is production and what is consumption? Tomato juice is production and tomatoes is consumption. Correct? Which means when we are talking about the production, we are talking about finished goods. And when we are talking about consumption, we are talking about raw material. So if you come here, see this. I've given you two spaces here. Do you see that? Raw material and finished product. So now I need you to fill this up for me. So how will you fill this up? Raw material. What all could raw material consist of? Opening stock, closing stock. What else comes on the debit side? Purchases. I purchased the raw material. Opening stock was the stock of raw material which was lying with me in my godown, which has been transferred from the previous period, which I can use in this particular period, but it was left unused in the previous period. But I can make fresh purchases, correct? I can make fresh purchases. So now the adjustment of opening stock of raw material plus purchases minus closing stock of raw material, what does that give me? Consumption. Raw material consumed, raw material consumption, raw material usage, all mean the same. So this is nothing but 2 tomatoes in my example. 2 tomatoes, correct? Now look at this. Come to finished product. Likewise, finished product can have opening stock and finished product can have closing stock. So opening stock and closing stock of finished goods, right? But what else comes on the debit side? Purchases. If you are purchasing finished product, then why did you purchase raw material? So you have purchased raw material so that you can process it. Why did you want to process it? To produce your finished product. So what will come? Production. Production. Production of finished product. So what do you get when you adjust opening stock of finished goods with production of finished goods minus closing stock of finished goods? Sales. You get your sales, correct? So guys, when we look at production, we are talking about 1 tomato juice. Do you get the difference between consumption and production? Consumption is in terms of raw material. Production is in terms of finished goods. So these two are the same thing but for different aspects. One is for raw material, one is for production. So consumption is expressed in terms of raw material units. Production is expressed in terms of finished goods. So if this is clear to you, you can solve problems very, very easily. So if they are asking you to say prepare the purchase budget, you have to calculate the quantity of purchases. How will you calculate? Consumption plus closing stock minus opening stock gives you purchases. If they ask you to calculate consumption, how will you calculate? Opening stock plus purchases minus closing stock. Similarly, if they ask you to calculate production, then opening stock of finished goods you have to take, closing stock of finished goods you have to take. So sales plus closing stock minus opening stock. Similarly, if they ask you to prepare the sales budget, what will you say? Opening stock plus production minus closing stock. So obviously, if you're calculating sales, you have to take all those components which belong to finished goods. Don't bring material into the picture. Similarly, when you're calculating anything in material, you have to take all those things that belong to raw material. So see this? I've given you all the formulae here. Consumption of raw material. Tell me the formula. Opening plus purchases minus closing. Opening plus purchases minus closing. Yes. Consumption of raw material. Opening plus purchases minus closing. So that is the same thing obviously. From here only you can figure it out. Production of finished product. So I have given you the relationship between consumption and production. Okay, production of finished product. Formula: sales plus closing stock of what? Finished products minus opening stock of finished products gives you production. So see this: sales plus closing stock minus opening stock. Guys, is it okay? So depending on what they have asked in the question, we will do whatever we already know now. Okay, now one small thing that I missed out to tell you. Now this point number 4 relates to your flexible budgets. So I've already given you what happens to fixed cost. I've already given you what happens to variable cost. What if they give you semi-variable cost? Then what will you do? So you will have to basically split your semi-variable cost into its variable component and its fixed component. Variable component will go to variable cost, fixed component will go to fixed cost. Guys, it's okay? So now, one more important thing is that how do you realize whether a given cost is fixed or variable or semi-variable? So simple example. Let's take in 2012, 2013, 2014, they had given us labor cost. Okay, so this was 1000. In 2012, I was manufacturing 100 units. Here I was manufacturing 200 units. Here I was manufacturing 300 units. And this was my labor cost. What kind of cost is this? Guys, obviously this is fixed cost. It's not changing when my number of units have changed. Okay, now let's say same thing. Now the costs are not 1000. Okay, they are say 200, 400, 600 versus now which is variable and which is semi-variable and why? First one is semi-variable, he says. Second one is semi-variable. First one is variable. See, you can only have two options. First one will be variable, second will be semi-variable. Or first one will be semi-variable, second one will be variable. Now which option are you choosing? So the first one is variable. Second one is semi-variable. So now how do you figure out? Guys, when it comes to variable cost, okay, variable cost will always follow the rule of proportionality. What is the rule of proportionality? Means for 100 units cost was 200. So for 200 units, what should the cost be? So when you cross multiply and see, what do you get? You get 400, which is 400, correct? But when you do the same thing for semi-variable, it will not follow the rule of proportionality because it is not variable. It is semi-variable. It has that fixed component also. So see here, when my production is 100 units, cost is 200. When my production is 200 units, I should get 400. But what am I getting? This is semi-variable. So always remember, when we are talking about variable costs, they will always follow the law of proportionality. Semi-variable costs will not follow. So what remains fixed will be fixed cost. What follows the rule of proportionality will be variable cost. And what does not follow or whatever is left is your semi-variable cost. Please copy this, very, very important. Otherwise, you will not be able to identify your costs. So you can say variable costs always follow the rule of proportionality. Semi-variable costs do not follow the rule of proportionality.